If you have, or if you're going to have a pension in retirement, and that means you've got an enormous choice ahead of you. When you retire and turn that pension benefit on, do you take the highest benefit amount, but that benefit completely stops if you pass away or when you pass away? Or do you take a reduced benefit, a smaller monthly pension, so that if you pass away, when you pass away, there's a little bit left to your spouse? Guys, in this crucial decision, there's a better way. I've got that approach and more coming up. Pensions are becoming more and more rare. They used to be a staple in retirement, and now they are the unicorn, really. It's just more rare. And yet, despite that rarity, if you have a pension or when you do, it's wildly important to your overall retirement plan. If you're not familiar, a pension is essentially a retirement plan that's been set up and funded by your employer, likely only your employer. Likely you didn't put any money into this thing and you don't see how much is contributed to it. You have no idea how much is set aside for you. You have no control over how it's invested. The only thing that you do know is when you retire, as long as you meet the eligibility, the vesting schedule in that formula, when you retire, you can turn on that income stream and it's going to last for the rest of your life, as long as you last, right? It's going to be there for you. The challenge is, if it was only that simple, right? You actually have choice. Do you pick a pension benefit that is based on your life only, or do you select a pension benefit that if you happen to pass away, well, the monthly income, that benefit will continue to your spouse? Well, given the choice, if it's that simple, I'll take the one that continues if I pass away for my spouse as well. That helps manage risk. But it's not that simple, guys, right? That choice influences how much your pension benefit is. If it's just based on your life only, that is going to be the highest possible payout, right, of the range. When you go to select how you want to take your pension, there's the choice of life only or joint and survivor. And there's typically percentages for joint and survivor. Do you want 100% joint and survivor, which is going to be the lowest payout? And that means you're going to get X amount. And if you pass away, your spouses will continue to get that same amount. Or 50% joint survivor, 25% joint survivor. That percentage is what is the amount of the pension benefit that you receive while you're alive? What's the amount that will continue to your spouse if you pass away? So you've got an enormous choice, right? And this choice not only impacts your retirement, but it also impacts your protection plan, right? This has to do with, well, what happens if you pass away? So your estate plan as well, your present financial position, that's your cash flow. It touches most, if not all, of the 6 areas of your financial life. It's an enormous decision. And when it's phrased this way, it's often decided upon based on just emotions. On one hand, the benefit of taking life only is you get the highest maximum pension payout available to you. But the negative is pretty obvious as well. When you pass away, and if it happens to be early in retirement, that income's gone. That entire benefit, all of that money that was set aside and earmarked for you by your employer and was promised to you, now is gone. It does not continue to your spouse. It does not continue to your heirs or your estate. It's just gone. So very, very clear for life only, very clear benefit, very, very clear disadvantage as well. Well, the other side, right, let's just say 100% joint survivor or some sort of joint survivor, those are very clear pros and cons as well. The pro is that if you happen to pass away, that, yep, there's going to be some, either all or a portion of that pension that will continue for your spouse, right? And that gives you some peace of mind and some clarity, helps you with your protection plan, estate plan, that sort of thing. But the negative, the drawback is pretty clear as well, although there's a wrinkle to it. The one drawback is, well, you get a reduced pension benefit. So you're giving up a chunk of dollars every single month for the rest of your life. But the other, the secret, the wrinkle disadvantage that most people don't think about is, what if you and your spouse pass away at the exact same time? Or what if you take a reduced pension that will continue for your spouse and your spouse passes away early in retirement? Many of these pension benefits, unless there's a period certain, which it can happen, but it's more rare, even more rare. Many of these pension benefits, if you do a survivor option, it's only available to your spouse. It does not extend to the family or to your heirs. This is an enormous decision. This is why, if you have a pension, deciding how you're going to take it is one of the biggest financial decisions that you're going to make in your life. And that's where a creative solution provides a better way of approaching and deciding on this key decision. That is called pension maximization. Pension max. And we recently went through this scenario for a newly retired police officer in our area, analyze this pension max situation to help them make a fantastic pension decision. And guys, the solution from this creative approach, pension max, was far better than the client even expected, even far better than what we've seen in many recent years as well. Here's the scenario. For her, she was retiring from the police office or from the police department, and her pension was going to be X amount, okay? But she really wanted to. They didn't have any life insurance, and she's young, okay? She's in her mid-50s. Her husband is about 4 years older than her, but she realized this is going to be a big part of our pension. I should be taking the 100% joint and survivor. I should be taking the reduced benefit so that if I pass away early in retirement, because again, mid-50s, late 50s, retirement's going to be a long time. If I happen to pass away, this is going to be an important benefit. I don't just want it to go away. So they came in thinking, yeah, we're going to do the 100% joint survivor benefit, take the reduced amount. Guys, the reduced amount was an $800 reduction in the monthly benefit. That's right. From the single life or life only to the 100% joint survivor, it was an $800 a month reduction. That's 10 grand a year. Instead, financial advisor on our team, I worked with him as well on this, he ran the analysis and figured out, okay, well, what happens if she does pass away? She retires, the very next month she passes away, and she took the life only, and all this income's gone. How much life insurance? That's right, life insurance. How much life insurance would need to pay out? What's a death benefit amount that if it was paid out in the month that she passed away and right as she retired, it would replicate the exact same income stream that is now gone for this life only. And that amount of life insurance only cost 2 grand a year. So think about this. Now she's taking the life only, so the highest amount of pension, and she's going to give up 2 grand a year instead of 10, so that if she passes away, her pension will stop, but life insurance, tax-free life insurance, will be deposited into her survivor, her husband's bank account, and he'll be able to continue replicate that income stream that all of a sudden stopped. Even better, right? I already mentioned that the pension would have been taxable, the life insurance benefit tax-free. And then finally, benefit number 3 to this pension maximization scenario is if her husband happens to pass away early in retirement, not her, right? She could simply cancel the life insurance. She's now selected the higher benefit. There's nothing that she's given up and receiving no protection for. She could simply say, well, unfortunately, I'm now heartbroken and my husband passed away. I'll just take the higher pension benefit and I no longer need life insurance. Or if they have kids and they both happen to pass away, now that death benefit would be there and be there for the next generation as well. So having a pension, extremely rare. I know, I wish it applied to more people's retirement because of the benefits and the foundation that it provides. But for those of you that do have it, it's an enormous financial planning decision, and I want you to have the right clarity, confidence, and creativity exploring a pension max scenario and whether life insurance makes sense as part of that decision, and if so, what kind, what amount, how do you structure it? Work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.